What is going on, investors? Hopefully you guys are doing well out there. It is time to talk about Bank of America Corporation, ticker symbol BAC. The company just reported their Q1 earnings today. We'll get into them. We'll take a look at the revenues, the profits, the different type of business segments that Bank of America has going on. I tell you what, I posted 2 videos last week on some bank stocks. We looked at JP Morgan, we looked at Wells Fargo, and I tell you what, Bank of America is painting a little bit different story. That's why each and every one of these bank stocks perform a little bit differently. This is why we go through the numbers. We'll take a look at this from a technical perspective as well. Interesting technical pattern. Could be an area where honestly you could step in here and buy this one if you feel like it. We'll talk about that and more on today's show. Let's start things off with the Q1 earnings. We had revenues of $23.2 billion. When we get over to the earnings, I'll show you those revenues. We'll see how they compare to the fourth quarter. We'll also see how they compare from a year ago over at Bank of America. Now, what's interesting about Bank of America is their results deviate a little bit from what we're seeing with the other banks. So they're actually seeing their average loan balances and their loan growth actually go up kind of quarter over quarter, year over year over at Bank of America, which was different. We actually saw loan contraction at the other banks. Bank of America is doing a nice job. I don't know if they've got a bigger book of business or they're just maybe extending credit to more people. I don't really know what it is, but they're actually growing their loan growth over there. Now, what's also growing over at Bank of America are average deposits. Those were up 240 billion, not 240 million, 240 billion or 13% to $2 trillion. They have $2 trillion on deposit over at Bank of America. And I kind of laugh at that because first of all, you've got this massive inflation that's happening month over month. Holding money in a bank deposit is probably one of the worst things you could possibly do with cash at the current time, but that's kind of a different story, maybe a different video for a different time. But what this does say is when you see this $2 trillion average deposit, it does fly in the face of some of the videos I've posted, certainly some of the videos that are out there that talk about how we're on the doorstep of a recession. And I don't necessarily think that's a hard argument to make. Okay, you look at the inflation data, you look at where interest rates are starting to trend. I think we could easily assume that there's a recession on the doorstep. But how serious of a recession can it be when there's $2 trillion on deposit just at Bank of America? That's a lot of money. And certainly if we don't head into recessionary time, if we have kind of a recovery, if you will, well, I tell you what, when you have $2 trillion on deposit, that's going to give you a lot of room to loan that money out. And then you couple that with higher interest rates. Well, I tell you what, Bank of America is very well positioned. I probably should say that Bank of America is one of my largest holdings outside of the tech sector. So you can see the excitement in my voice when I go over these financials, but there's a reason why this bank over the other ones takes precedent in my portfolio, and that is because of these results, which I'll talk about here in a second. But look, a lot of you might be watching this. Maybe you don't have any exposure to the banks. Maybe you're not really sure which banks you want to get exposure to. Well, the easiest way to get exposure to is maybe through an ETF. And this is not an endorsement of this fund, but this is the XLF ETF. I tell you what, most traders, if you're trying to trade the financial sector, they'll bring up the XLF and they'll trade this, okay? Right now, you're getting 1.73% on a dividend rate on that. The expense ratio is rather low on this. Again, I'm not trying to endorse this ETF, but it is the largest. When you look at the volume, you look at the assets, I mean, it's a $41 billion fund. It's a gigantic ETF. So if you're not really sure which banking sector, if you just want exposure to it without having to go through all the research that I think you need to go through to pick individual stocks, well, the XLF is probably a good choice. But what I wanted to show you about the XLF is you come down to holdings and you see that Berkshire Hathaway is its number one holding with a 15% weighting. Then you got JP Morgan at 9%, Bank of America's at 6.5%, and Wells Fargo's at 4.4%. So if you kind of total this up, this is well over 35% of the fund. More than a third of the fund is actually tied into Wells Fargo, Bank of America, JP Morgan, and Berkshire Hathaway. So if you don't want to go the ETF route, you want to invest in the financial financial sector? Well, I would focus on these four companies first and maybe picking them up. This is why we always talk about the stocks from a technical perspective as well. You can load up or get a couple of shares of the one that looks the best from a technical perspective. And when the other ones pull back into your zone, you can start adding to those shares. So you really can kind of couple good valuations, good fundamentals, also good weighting inside your portfolio. This is essentially how I've weighted my portfolio with these four companies, although I have an emphasis on Bank of America. And I'm going to show you why. Okay, number one is we talked about how their loan growth was actually growing. And then when we looked at JP Morgan, it was actually contracting a little bit. Now, that's not the only thing I like about Bank of America. We've got our total revenue up here. We talked about how it was $23.2 billion in the quarter. Last quarter, so on a quarter over quarter basis, grew just fractionally. Okay, we were sitting at $22 billion. I say fractionally, that's $1.2 billion over the previous quarter. Over the previous year, we are seeing a little bit of growth as well. We were at $22.8 billion in the first quarter of last year. Again, we ticked up to that $23.2 billion. Now, the other thing that we've noticed is the provision for credit losses. We set aside about $30 million when we've been releasing that into the system. That certainly helped our net income in previous quarters. Certainly this fourth quarter, when you released $1.8 billion for provision for credit losses, it really busted up your net income. I mean, really, really nicely. Now, you're not doing that as much in this first quarter, but it is not an egregious amount. It also shows you that there is confidence over at Bank of America. And why wouldn't you have confidence in the people that are doing banking with you at Bank of America when you've got $2 trillion on deposit? Now, what we see that's a little bit different between Bank of America and JP Morgan especially is the fact that they did a nice job. Non-interest expense in the quarter for Bank of America was $15.3 billion. It was $15.5 billion last year on a quarterly basis. So essentially flat, but down just marginally year over year on those expenses. They've done a nice job over at Bank of America controlling that. That gets us our income before income taxes at $7.8 billion. Now, it is down from a year ago, but we talked about because they added this $1.8 billion of credit losses back into their system that really, really pumped up their income before income taxes to $9.1 billion. Quarter over quarter, we're essentially flat over at Bank of America, and that is a nice trend. You got about $8 billion of income. Now you pay some taxes and all that stuff over at Bank of America, and you come down here to net income at about $6.6 billion. Again, down from a year ago period. Also down quarter over quarter, but we have to factor in that this company was releasing those provision for credit losses back into the system that they set aside likely in 2020, kind of in the second and third and fourth quarter, expecting consumers to kind of default on loans, but they didn't because they all got checks and PPP loans from the government. And so a lot of those, quite frankly, are still sitting on the deposits. We have total deposits sitting down here at over $2 trillion. We were at $1.8 trillion a year ago period, and it is even up quarter over quarter. We're sitting at $2.01 trillion. Now we're $2.04 trillion. People are just piling money into their bank accounts despite inflation just chewing the value of that money up. I tell you what, if you're a viewer of this channel, you're probably not doing something that stupid, in my opinion. Now, you come all the way down to earnings, 81 cents per share. We take a look at the dividend rate over at Bank of America, and this is also a reason why I've really stacked this company in my portfolio, is because for the full year, they give you 84 cents. Now, there was a moratorium on buybacks and dividends by the Federal Reserve during the pandemic. That has been lifted. This company continues to raise their dividend. They continue to do share buybacks. That will absolutely help this company in the foreseeable future. Now, from a valuation perspective, Bank of America is it's not like wildly undervalued right now. We'll look at it from a technical perspective, kind of paints a little bit different story, but we've got our tangible book value over here at $20 per share, $21 per share. It's essentially in line with where we've been over at Bank of America, but what I did want to show you is that tangible book value in historical reference to what Bank of America has been. So we've got a 10-year chart. Right now, book value is price to tangible book is about 1.7 times. And we see here, at least from a 10-year perspective, it's still a little elevated, okay? I actually think if this one gets down to about 1.5 times tangible book, I've bought this one much lower. The times I've loaded up on Bank of America and the time I actually load up on bank stocks in general is actually when they trade under 1 times tangible book. You're basically getting the book of business at a discount, and it doesn't happen very often. This is why I haven't bought Bank of America shares in a little while. I think I touched a few of them in 2020 because they just dropped so much. Like a lot of stocks, I added a lot to my core positions during that drop, really not during the drop, but kind of as it was coming back up. But I added a lot of shares. I believe it was during this time in 2016 with Bank of America. It's because you were buying the book of business for actually under the book value. Now you're paying a premium, about 1.72 times. It's still not a ripoff. It's certainly not as high as it's been. This has been over 2 times tangible book, which I would almost never pay for any bank as this continues to walk back. If it continues to walk back, certainly can create more value there. Now, from a technical perspective, though, this one is looking not that great, okay? Because you notice in the very shorter term, I mean, we're talking about over the last couple of months, we've basically made this downward channel, and a downward channel is lower sets of highs. We made some highs back here in February at about $49 per share. We made a lower set of highs back in March at about $43 per share. And what we've done also is create lower sets of lows. There were some lows here at $44. There were some lows here at $38. And it looks like to me we're in the midst, even though the stock has traded up from these lows close to about $37 per share. This could be where Bank of America reverses. This could be an area of support. It could be just an area where it hesitates for a moment because this $37, $38, $39 per share price for Bank of America has acted as a level of support in the past. Back in July of 2021 and also in September of 2021, the stock would touch that level and then rebound and bounce back up. That's kind of what we're seeing after these reports, after these earnings over Bank of America, which quite frankly are rather stellar. I think these are fantastic. And I think it's a big, gigantic if we can have elevated rates, not for a couple of months, not for a couple of quarters, not even for a 12-month stretch of time, but if we can get sustained rates, like I'm talking maybe the 30-year mortgage over 5% for over 2 or 3 years, well, I tell you what, this company has $2 trillion on deposit. They're going to be able to take a ton of that money and monetize it. So Bank of America, there's some push-pull here, okay? But back to the technicals, there is this area at this $38, $39 area where in the shorter term, that's where the stock is consolidated. It's consolidated between about $39 up to about $48 per share. If you think this shorter term downtrend that we've been making, which I wouldn't bet on this downward trend being over, well, I tell you what, this is an area where you can step in. If not, there are areas where I like it much more, okay? And we're not talking like huge drops with this stock. When we look at a Bank of America stock, when we look at a stock that has this kind of stability and it has $2 trillion on deposit and has positive net income and all those types of things, well, it's not like some of your unprofitable Cathie Wood tech stocks out there that have swung 60, 70% over the course of a year. If this downtrend continues, I would actually expect us to come back and retest kind of the highs we made before we had the pandemic drops over on a lot of stocks, including Bank of America, closer to about $34, $35 per share. Again, that's only $4 off of where the stock is. That's about a 10% move down. But quite frankly, you get that 10%, it makes the traditional valuation metric look a little bit better. It also might give us a clearer view on the overall economy. I think everybody's in agreement that a recession is absolutely probable here in the United States and certainly around the world in the next 12 to 18 months. But how deep it is and the impact on stocks like Bank of America, which already have a pretty reasonable valuation and strong fundamentals, remains to be seen. There are areas where this one can pull back. Because I've been in this one for so long, these are not areas I really would be interested in. I'd be interested in a far deeper pullback in a stock like this. But if you were just building up your positions in the banking sector, you've stuck with Cathie Wood stocks or you've stuck with tech stocks, well, opening up a position at this level, not necessarily the worst thing that I have seen. And again, you can always get your exposure through ETFs like the XLF if you don't want to go through the financials and really pick winners or losers here. I would say, though, if you want to pick winners or losers, there's only about 3 or 4 companies that I would concentrate my portfolio on when it comes to the financial sector. And Bank of America is near the top of that list. Hopefully you guys enjoyed today's video. Back in soon with lots more this week. Good luck with your investments.